Hi friends, today we'll discuss what is capital gain. So, when you are filing your tax return, this one, is there any capital gain? Okay, what is capital? If you invest any money into land or any asset, if the value is increased and you sold for the higher price, then it is your capital gain. So, capital is gained. So, profit earned, sale of asset. Any asset, if you are sold and you got any profit, that will be considered as capital gain. Increase the value of your holding period. See, you purchase a land for 10 lakhs. After 3 years, it has become 50 lakhs and you sell it for 52 lakhs. So, whatever the 42 lakhs is your capital gain. So, for the capital gain, you have to pay the tax. So, increase in the capital asset value and realized when the sold. So, once if you sold the property, then only your capital gain will be arrived. Otherwise, capital gain will not be calculated. Should be a transaction, buying and selling. Then only capital gain will be calculated. So, what are the capital assets? Land, building, house property, vehicles, patents, trademarks, leasehold rights, machinery, jewelry. If you buy and sell for a higher price, then this is called capital gain. So, whatever the assets in below categories, these will not come under capital gain. So, for example, any stock, consumables, raw materials for the purchase of the business or profession, if you buy and the rate is increased, then this will not be considered as capital gain. Only for the investment, if you buy something and you sell something, then it will be called as the capital gain. Something you are a manufacturer, you bought some copper, gold. If the price is increased, this is not a transaction, selling and buying. This is raw material you have taken. You have to make a jewelry, so you purchase the gold. To make a some wire, you have purchased a copper. So when a price goes, and these will not be come under the capital gain category. So personal goods such as clothes, furniture for the personal use, if the price goes up, this will not be come under capital gain. Agricultural land in India, if the rate is gone, today it is 1 lakh and tomorrow it may be 20 lakhs, then these will not be come under capital gain. So 6.5% gold bonds issued in 1977, 7% gold bonds issued in 1980, national defense gold bonds issued in 1980. These bonds, if the price is gone up and you sold for the higher price, this will not come under capital gain. Special bearer bonds in 1991, all other schemes mentioned. If you buy something and if the sold for higher price, you need not show in the capital gains and you need not pay the capital gain tax. So somebody is preparing for the bank exams, it is very important, please remember these dates. And types of capital assets are short term and long term. So if anything you purchased and sold a period less than 36 months, this will be considered as short term capital asset. And if you get money, then this will be considered as short term capital gain. Short term capital gain will not be same for all the assets. Okay, if it is immovable property, so this will be 24 months. For the shares, it will be different. For the gold and jewelry, it will be different period. So you can see like different categories, different period is available. For example, for the equity shares, 12 months. Okay, so short term will be considered different asset as different period. For example, securities like debenture bonds and government securities, 12 months will be considered as a, if anything bought and sold before 12 months, this will be considered as a short term. For other things, it will be 3 years. And for some assets, it is 24 months. So you have to see the category of asset also. Long term means anything more than 36 months, if you bought and sold after 36 months, this will be considered as a long term capital gain. Okay, long term capital gain, even for the land building and house shall be considered as 24 months. Yes, we already discussed. So if it is a shares, if it is more than 12 months, then it will be considered as a long term capital gain. If you bought and sold after 12 months, then this will be considered as a long term capital gain. And classification of the even though you are not bought or sold, but you acquired the property by gift, will, succession means father or forefather, somebody is expired and you got the property, so these also will come under capital asset. And when you buy us, so you got the shares from your father or you as a gift, anything, you sell it for highest price, then you have to pay the capital gain tax. Not only buying and selling transaction, if you got the asset as a gift, will, succession, if sold for higher price, then you have to pay the capital gain tax. So what is the percentage for the long term capital gain tax? So sale of equity shares and mutual funds, so 10% above 1 lakh, others 20%. So short term, when security tax is not applicable, a normal slab rate, SCT is applicable, then 15%. So how can I get exempt capital gain tax? Okay, now I purchased a property and sold for higher price. I got the money. So how to uh, get the exemption from the capital gain tax? So you can exempt, like you can invest in government bonds and instruments. Then within the sale of within the like today you have sold your property, within 6 months you have to purchase this gold government bonds and instrument, that amount will get the exemption. Or you can buy a new property, new house, then you will get a exemption. If it is a residential Indians and age is 80, then 5 lakhs, your income is below 5 lakhs, then you will get exemption. If residential Indians age is 60 to 80 years, and you will get exemption, uh, 3 lakhs per annum. So these also exempted from your capital gain amount, and your tax percent also it will be reduced. So what are the cost? So I said one property bought and sold, and directly difference amount will not be treated as a capital gain. So before calculating capital gain, your, if you have paid any tax, that will be removed. Okay, you have paid any stamp duty or any legal fees, real estate fees, all these are, you want to improve your property, you spent a money, that also like a renovation of kitchen, bedrooms, all these amounts will be removed from the capital gain amount. After that only capital gain amount will be calculated, tax will be calculated on the capital gain amount. Thank you friends. If you like my video, please subscribe and share with your friends also.